evening and welcome to the Money Show. I am with you, Kavita Thapliyal, and this is the place where money stops being confusing and starts working for you because let's face it, every decision we make, from the coffee we buy in the morning to the home we dream of owning, from planning our next holiday to securing our children's future, has one thing in common, that's money. Yet, despite the role it plays in every chapter of our lives, very few of us were ever taught how to manage it, grow it, or make smarter financial decisions. And that's where we come in. Whether you are just starting your financial journey, building wealth, investing for the future, planning your retirement, or simply trying to make your salary stretch a little further, this is your show. Every day, we cut through the jargon and the noise to bring you practical advice, expert insights, and smart investment ideas. So, if you want to get connected with us, all you have to do is just scan the QR code that's flashing on your screen and send across all your portfolio details so that we can align you with all your financial goals that you have dreamt for yourself. All right, so the guest on the show who's going to answer all your portfolio queries is Shweta Rajani. Shweta, hi, good evening and welcome to the show. Shweta, we are also joined by our viewer live on the phone call. That's Narupa. Hi, good evening. How are you?
Hi, good evening. I'm good. How are you?
I'm doing good. Thank you. You're calling from?
Hyderabad.
Hyderabad. All right. You can ask your question. You have a portfolio that has a value of almost 21 lakhs right now?
Yes.
Okay. The goal is retirement. Can you tell me how far is this retirement target now? For how many more years can you stay invested?
10 years.
10 years? Okay.
Yes.
Okay, you are investing 60,000 per month, 6 different mutual funds. And I just want to know the corpus that you want to accumulate.
Somewhere 3 to 4 crores.
Okay, I'll take the higher figure. Let's make it 4 crores. And will you be able to step up your investments?
No.
Okay, so 60,000 and that's it? No lump sum investment as well?
Lump sum I do like whenever I have some money accumulated. Yes, I can do lump sum.
Okay, so you can do lump sum. Okay, so all right, so let's help you with that. Shweta, how are the funds? And 10 years time, 4 CR is the goal. He can invest in lump sum whenever possible. But is this enough for him?
Yes. Good evening, Kavita. Good evening, Narupa. So, I was just doing some basic math on your goal for a 10-year horizon that you have. If you're targeting 4 crores, the current lump sum as well as the SIP that you're doing may not be sufficient. Looking at the historical track record of equity, you may get to somewhere around 2 crore of a corpus with this. So it becomes that much more essential that whenever you have a lump sum, please add on to that approximately. I would say, let's say today you're doing an SIP of 60,000 per month. That basically means 7,20,000 is getting invested as an SIP for you every year. Now, I would suggest if you're going to do lump sum, at least try and do 1.5 to 2 lakhs of lump sum at least every year. If not this, if you can do a step up, then do a 15 to 20% step up. But if you're only going to be doing lump sums whenever you have an option, a 2 lakh of lump sum every year add on to what you're doing will take you up to somewhere closer to that 3 to 4 crore of goal. Coming to your portfolio, we can also build in some efficiency in the portfolio so that you get closer to your goal. I had two observations. One is 60% of your money is invested in SBI as an AMC. It's just always good to diversify across asset management companies, however largest the AMC is. Second, you have an index fund in the portfolio. Being in an active fund can add on to that 2 to 4% of an outperformance on a year-on-year basis. So my suggestion is you stop the SIP running in the SBI Nifty Index Fund. Stop your SIP in the Geo BlackRock Flexi Cap Fund and stop your SIP in Axis Midcap. There are better funds available in the respective categories. When you stop the SIPs, what you can add on to or newer funds which you can consider, I would suggest you to add on to a quant large cap, an ICICI approved dividend yield, and a DSP large and mid cap fund to the portfolio. Whatever amounts have finished 1 year in these three schemes, also you can exit and add into the three new schemes that I mentioned.
All right. Narupa, you want to ask anything else?
Yeah. Yes.
Go on.
So in SBI, right, I have three funds. One is the index you asked to stop, but I have like focused and small cap also. So recently I stopped the SBI small cap because I was hearing a lot of comments that it's not doing good and all. So I stopped that and I jumped into Bandhan small cap. So I want to know on focused, SBI focused, and what should I do with SBI focused?
So, Narupa, here you can continue with your SIP in the SBI Focus Fund. It did, I would say a few years back went through its rough patch, but then the fund has seen its improvement coming in. So that's a scheme you can continue with. If you've already switched from SBI Small to Bandhan Small is also a good fund. Continue with your SIP there. And whatever lump sum you have in the SBI Small Cap Fund, you can retain it for the time being.
All right, Narupa, I hope that we've answered your portfolio question. Thank you so much for joining in today. If you want to ask anything else, do send across your question once again. Now we are joined by Mr. Murthy on the phone line. Hi, good evening. How are you?
Good evening. Thank you.
You're calling from?
I'm calling from Mumbai.
All right. Well, you have a portfolio value around 1 CR. You've been investing since 2019. So how has it been? Can we call you a very patient investor for not losing all your faith in equity?
No, not really, but whatever little knowledge I gained through your channel and others, I've been stayed put in. But my question is, I've shared my portfolio.
Sure,
now the question is, I've been investing through SIP. Just my question is, should I continue in these funds? I've given approximately I can invest around 2.2 to 2.3 lakhs per month. So how should I distribute my SIPs across these funds, and any portfolio corrections are required?
What's the retirement corpus that you want to accumulate?
No, I don't have any figure in mind, but whatever probably with maybe long term, if I stay invested for next 13 years, whatever the market returns I'm expecting, I don't have any figure in mind. Maybe around upwards of 6 crores.
All right, 6 crores or more than that. Interesting. Shweta, what would you recommend?
Yeah. So, in your portfolio, Murthy, one thing that I was observing is that you have a very high exposure to, I would say, mid and small cap in the portfolio. Now, ideally, while mid and small caps have performed very well in the last few years, there is a requirement to also consider the risk aspect of it. And therefore, you need to maintain a balance between the large, mid, small allocation of the portfolio. So somewhere around maintaining a 55-ish kind of a large and the rest of it being mid-small with an equal split is good enough. So in your current portfolio, you're somewhere closer to a 30% large cap. So that 25% of a correction is something that's needed. So that's where, one major recommendation to you is in terms of the funds that you can look at exiting from the portfolio. Clearly I'm reducing some bit of the mid cap, somewhere around 14-15% of the mid cap allocation is coming off, and approximately a 10% of small cap I am reducing and adding on to the large cap allocation. Funds that you can exit from your portfolio that you have. You can exit from maybe a Canara Robeco small cap fund and shift out to a Canara Robeco multi cap. In the portfolio, or go in for in absence of another alternative for you here could be you go in for a Bandhan large and mid cap. A few other funds that you can exit. You have a Motilal Flexi Cap fund. You can exit from that. Exit from the PPFAS fund in the portfolio. What you can add on to is a DSP large and mid cap fund, and you can add on to a ICICI approved focus equity fund.
All right, Mr. Murthy. So there are a couple of changes that are recommended. Did you understand anything else? Mr. Murthy, are you able to hear me?
Yes, I'm able to. I made a note of it. Thank you.
Okay, all the best. Thank you so much for sending us your question. We are joined by Arjun now. He's our other viewer on the phone line. Arjun, hi, good evening. How are you? Arjun, hi, can you hear me?
Hello. Hello.
Yes, hi, Arjun, I can hear you. Arjun, you can ask your question.
Hello.
Okay, I think there
Hello.
was. Arjun, can you hear me? You can ask your question. Okay, so I think there's some problem, but we have his question with us, Shweta. So he's almost 2,30,000 every month is what his investment is across equity, debt, gold, and the silver equity. He's also has a debt allocation in his portfolio. He's investing in gold and silver 23,000 per month. Has a 5+ years time horizon and can tolerate high volatility. He wants to know on where to direct future small cap SIPs. Okay, you've got the fund list on you, Shweta, and a well diversified portfolio equity and debt allocation is also 37,000 per month. This investment is just for 5+ years. I really am not sure whether he is good with the high volatility for that time duration. Do we have him on the phone line now? Okay, I don't think so. He's there. But Shweta, so 5+ years is a time frame he can invest. But would you recommend more small caps, or it's time for him to start tracking back or out of equity because it's just 5 years at most?
Yeah. So, Kavita, on his portfolio, and Arjun, if I'm guessing you're hearing us, see, I was looking at the asset mix of the portfolio right now. What you have is a 76% equity allocation and 26%, 24, 25%, or a combination of gold and debt. I would consider gold as, from a volatility standpoint, it has risk which is more than debt. Return also slightly higher than the debt portion. Now, if you don't need gold from a consumption standpoint, it may be a good time to book your profit and get to the same asset mix of 75-25, but 25 being more on the debt side so that the volatility or the risk of the portfolio comes down since you have a 5-year horizon. So that's, one thing from the asset mix standpoint. Or if you want to go a little aggressive, you could probably go 80% equity and 20% pure debt in the portfolio. That will also help you manage the risk. Coming on to the small cap exposure that you have already on the portfolio, because I was seeing that you have a small cap fund, and then through the other funds as well, you are getting some small cap exposure. So you can maintain up to a 20-25 max small cap portion on the overall portfolio. But beyond that, I would say you would be taking a higher risk on the overall portfolio. A step up would be required for you to do. And, if you are wanting to build a good retirement corpus, some amount of a step up on the SIP is definitely required. I would say a 10% step up would be a bare minimum. Coming to the schemes that you have, some of the schemes where you can consider reducing or stopping your SIP, and whatever amount is out of your load period, removing that as well or redeeming that as well would be one. The Nippon India Silver ETF that you have. Silver ETF again tends to have more volatility. Silver as a commodity tends to have more volatility. The Motilal Oswal Nasdaq, the Nifty Mid Cap Index Fund. It's always better to be in an actively managed fund. It can enhance the return due to the active management by around 2 to 4%. The Axis Nifty 100 Index Fund and the ICICI Pru Large Cap Fund. What you can add on to in the portfolio: Invesco India Focused Fund, SBI Large and Mid Cap Fund, and a Kotak Multi Cap Fund can be added. If you are looking at a small cap exposure, you can consider a HDFC or an Invesco small cap fund, but be very cautious and review that on an annual basis in your entire fund basket.
All right, so I hope that answers all of your question, Arjun. And also, I don't have more time on this particular question, but Arjun, it will be good if you give us the exact time frame, because if it's just 5 years or maybe slightly more than that. Arjun, are you there on the phone line with us? Can you hear me? Arjun? Okay, so next time when you give us the question, Arjun, try specifying the number of investments years that you want to put in with this investment, and accordingly we can give you a strategy to start moving out of equity and maybe go heavier on your fixed income side. But having said that, it's time for a short break, and post that we are connecting with other viewers as well and answering their portfolio questions. Stay tuned. Welcome back. You're watching The Money Show, and it's the last leg of the show where we're answering your portfolio queries. And Shweta Rajani is the guest on the show who's answering all of your questions. Shweta, next question is coming in from Deepu. He's 32-year-old NRI based in Germany, 27 lakh invested in fixed deposit at 8% interest, receives around 21,000 monthly interest, invests 21,000 in mutual funds, and he has SIPs going on in Parag Parikh Flexi Cap, Nippon India Small Cap, Motilal Oswal Mid Cap. His investment around time horizon is almost 20 plus years, and wants to know whether he should be moving away from FD and put the money in mutual funds. He also wants you to review his fund mix. Well, he's got a decent time horizon in hand. Makes sense to move out of a fixed deposit on whatever is matured for him.
Absolutely, Kavita. So, Deepu, see, since you have a long-term horizon, the benefit of compounding and the higher returns that you can get into equity is very, very critical from a long-term wealth creation standpoint. Correct? If I just look at the historical track record of Nifty, it says that if you have a horizon of 7 years plus, then the probability of earning less than debt gradually comes down to minuscule levels. So, and you have a 20-year horizon. So clearly, I don't think you should be conservative on your portfolio. You can go up to a 70-80% of equity and the rest of it being debt, because you may want to keep some debt from a safety liquidity standpoint. So it's okay to have some emergency fund in debt, but if this is your entire corpus in India, being just debt heavy may not be the right approach. So consider whenever your FD matures, or if there's a long time remaining, then even if you mean to do an early exit and switch into equity, that may be a good option. Now, coming to the schemes, here again, the SIP that you're doing is concentrated to just 3 schemes. I would suggest you to at least have 4 to 5 funds to start off with your SIP, and as the corpus goes up, you can increase the number of funds. Also, what's happened is the 3 funds that you have are heavy towards mid small. So, there again, you need a balance of large, mid, small, so that not just the risk is being managed, but the return is not getting compromised for you. So, one fund that I would suggest you to stop your SIP would be the Nippon Small Cap Fund. Stop your SIP there. Instead, what you can add on to would be ICICI Pro Focus Fund, a DSP Large and Mid Cap Fund. You can do a Kotak multi-cap, and if you so want to have one small cap fund and Invesco small cap, else the multi-cap fund will also give you some exposure to the small cap fund. So between Kotak multi and Invesco small, you can pick one. Have an equal distribution of the SIP amount that you're doing across these schemes.
All right, I think with that, we are timed out on this particular session of The Money Show. But thank you so much, Shweta, for taking your time out and helping our viewers today. Thanks.